Hey, so I'm thinking on Ethereum, we have a horizontal support right here, 581, right? So if you look on this correction here, we came down and got a lot of support right at that level. It also lined up with the top of the cloud right there, right? There was this quick wick down that got pretty close to that level. All this trading over here as we approach the top of that wedge. A lot of support from that same level over here on the way up. A lot of resistance from that level before finally pumping through. And then we can go further back and you'll see. But it's a good support resistance level. So looking at that, I was taking a look and I was thinking, all right, well, where do we fall if this is a count where we have wave 1, a wave 2 correction, and then we're on wave 3 now. Potential targets for this wave 3 could have been the 1618 extension, the most typical target for wave 3. But when you are in a hyper bullish environment like we are now, the 2618 extension is a very real possibility, which would be about 625, right? 623.94, roughly, call it 625. So I was looking at the different time frames and I realized that would actually be the perfect target for a correction because that ends up being a double top. That's exactly where the prior top was. If I pull out to the daily, not only can you see the extremely bullish and consistent repeatable pattern on the Stoch here, but take a look where the prior top was. It is exactly at that same 2618 extension. Look at that big pump. We had that doji and then a reversal, right? Exact same level. If we can push up to 625, that would be incredible. We'll run up to 625, get rejected, come back down for that wave 4 correction. Then we make the push up for wave 5. That would be an incredible progression for this setup. I would love to see that happen, but for right now, I'm thinking that is a very, very real possibility. Entering into an Ethereum position right now as a short-term position isn't a terrible idea. The 1618 extension is there. The horizontal support is there. Let me see. If you were to buy right now, if your stop loss was, say, 2.5% below your entry, you'd have the 1618 extension as a potential support, but primarily I'd be focusing on that horizontal support. Now, instead, I would take less risk. What I would do here, and you know what, I might actually do this. Since I have some Ethereum, but not really a short-term Ethereum trade going, it's more of a mid-term position, what I might do is use that horizontal support here at 580. 581.21 is a really good support. And if you look at the hourly Stoch, we're coming back down. But we've been so bullish. Like, check this out, for instance. On this hourly Stoch reset, we had pretty small correction, right? Then a wave up. The next time we were overbought on the Stoch and came back down, which is right here. You can see my cursor. We just went to look at the price. That same period, we just went sideways a little bit and then immediately recovered and went back up. Now, we very well may see that same thing happen here. And so far, we've been coming down on the Stoch. The Stoch has been resetting, but the price has not come down. It's just been moving sideways. That is another extremely bullish sign. That's why I think there's a really good chance this support at 581.21 can hold. And in theory, you could enter into a position here as close as you can to that support. And then your stop loss can go just below that support. So if you were to buy in and get some entries at, say, this would be, 583, right? Set some buy orders at 583. Then once they fill, you can enter a stop loss 1% below your entry, and boom, that's a low-risk trade. In this particular setup, given how bullish the environment is overall, if you buy right now, or even set your buy orders a little bit lower to about 583, so as it dips down here, little by little, it'll fill in that order like these little wicks did over here. The lower you get, the closer you get to that horizontal support, the better. And then your stop loss goes below the support, and it's 1% below your entry. 1% or less makes it a low-risk position where you're not risking any more capital than 1%. That's a really, really great trade with minimal exposure. And if you can get in that low, you could probably set your stop loss to within 0.5% of your entry, which would be incredible. So I'm going to probably buy a little bit right around where we are now. And then if we dip closer to that horizontal support, I'll buy some more. The entire time, I'm going to maintain a stop loss probably around 578, I think, would be a good level. Maybe 577, 578. So I'm going to do that now. And if you guys want to get in, then just make sure you have that stop loss under that horizontal support. If the horizontal support fails, which, it's possible, I think the odds are really good that we bounce off of that level and push up higher, given everything else I explained to you. If it were to fail, though, I would lose 1%. So you make a $10,000 trade and you're losing $100. It's not a very big loss. When on the other hand, if it were to break out and push up, you could potentially make thousands of dollars as it completes that wave 3 to the 1 or to the 2 rather, the 2618 extension. So tremendous upside, minimal downside, no brainer, low risk trade. I'm pulling the trigger on it.